Hi guys, so roughly 15 years ago, I used to work with a non-profit organization and my salary was somewhere around 12,000 rupees. Now this was not much, I was kind of struggling financially, but in the next 15 years, I took a series of steps in order to build my wealth. Now in 2025, I am sitting right on a large amount of wealth. I am based in UAE. I just registered a company in Singapore. Along the way, I did a lot of startups. I ended up working with two top tier consulting companies. I ended up going to a top 5 business school in the world. So there are a lot of series of good wealth building steps I took. And on this video, I'm going to take you through these steps. Just a very quick disclaimer that if you go and ask a random person in India, how do you build wealth in India? So they'll say that, okay, you come from a rich family, businessman or whatever, you have political connections, or you are like a government servant, right? And you are taking bribes or whatever it is, right? I'm not demeaning it. This is how generally a normal person would respond. Now that might not be clean wealth building. On this video, I'm going to teach you clean wealth building that might be applicable to 99% audience or 99% audience who is watching this video. So without wasting any time, let me just quickly take you through. And very quick background, right? So my name is Akshat Shrivastava. I started this channel in 2021, right? And before that, I ended up working with top tier consulting firms. I did my own startup. I sold one of my startups, got my initial money. So I've got that 360-degree perspective. I speak a lot about wealth building, wealth management, investing. But on this video, I just want to take you through a little bit more on the career side. What are the steps that you will go through in order to achieve wealth? So I'm going to talk about it in a very practical way. So the first key point that I picked up in my own journey of wealth building is that in order to make money, you need to have money. Now you can come from a business family, you can come from your mom, dad might give you a lot of wealth, generational wealth being handed over to you, all that stuff. I did not have any of that cushion. Yes, I grew up in a middle class family, right? My family spent money on me in terms of education. They gave me all the skill set. I had a privileged childhood, right? From that lens. But it's not as if that I went to like international schools and all that, nothing of that sort. I grew up in Gwalior, right? So it's not as if that a lot of wealth was handed over to me, right? So the first key lesson that I picked along the way was that in order to make money, you need to have money. So how do you get your first big paycheck or first block of money? In majority of the cases for middle class people, it would be through your job. Now, why am I saying it? Now, many people will get pissed off that, okay, aajkal to entrepreneurial culture is there. So why are you telling people that, okay, job is still good? Because there's a mindset with which you need to think about job. The way I would put it is that job is the only place where you get paid in order to be trained. Through my own story, for example, when I started working in management consulting, was I extremely happy? Yes, initial 2-3 months that, okay, it was great like office culture or whatever. But was I being worked to death 15-16 hours? Yes. Okay. Now, did I enjoy it? Sometimes yes, most of the times no. Was I frustrated with the job? Yes, like majority of the people who are frustrated with their jobs. But the fact remains that those jobs or those initial set of jobs gave me certain skill sets. For example, management consulting taught me how to communicate more effectively, how to do client meetings, how to give presentations, how to present yourself. So all these are small points, right? They add to your skill set. So the way I would encourage you to think about your job, for example, if you're in a job, you're frustrated. So the way I would tell you to think about your job is on 2 levels. One is that categorize your job into gold standard, silver or bronze standard. Now, what is the meaning of this? The meaning is that gold standard jobs are probably like top 1%, top 2% jobs in your industry. For example, if you're working with BCG and McKinsey, which are top 3 consulting firms, now these companies are top 1% consulting firms in the world. This is a gold standard management consulting job. Similarly, if you're a doctor, now you can be a gold standard doctor who is working with top hospitals. Similarly, if you're working in tech, you might be a software engineer. If you're working with Google and Microsoft, all these top tier, top 1% companies, it's a gold standard job. Now, why am I stressing on gold standard jobs? Because if you have a gold standard job, the chances are that you still have next 10-15 years of career ahead of you. For example, you would have heard that many people got fired from Meta recently, which is a top 1% job in terms of software engineering. Now, it's not as if that those people have permanently become unemployed. They will move to tier 2 companies, right? From gold standard jobs, they might move to silver standard jobs, or they might be able to switch to another gold standard company because they have Meta on their resume. But on the flip side, people getting fired from TCS, they might have a slightly more difficult time in order to get accepted to other type of jobs. So having this understanding that if you can move to a gold standard company or have a gold standard resume kind of adds a lot of value to you in terms of building your wealth, because for the next 5, 10 years, 15 years, you can be relatively safe. If I lose my job at Microsoft or McKinsey or JP Morgan, etc., I will at least be able to find something. Right now, that gives you a lot of cushion. So if you're in college watching this, definitely try to get a gold standard job. Even if you have to work at a lower salary for some reason, do that, not a problem. But build your brand, build your skills. That is something that I did also in my initial career. So this is the first part that you need to understand about jobs. Second key part in understanding your job is that what level of skill sets it will help you unlock. And this is a standard problem that happens when people start working at a company when they are 25, and by the time they are 35, they are bored because they are not getting any new skills, but they continue to work just for paycheck. Now, I would not really encourage you, if you are thinking from a wealth building perspective, to continue to do that. Why? Because there is skill stagnation that comes, right? This is very important, that you need to upskill yourself. Upskilling comes from practical experiences, and practical experiences come from constantly learning new things, right? So if you're a software engineer, it's high time that you start learning about AI, how it impacts your work, bunch of other different things, right? So this is very, very important, that these are 2-3 layers through which you need to start thinking about job. And just a very quick summary, that your first paycheck or first block of money will be made through your job. It will be made if you are at a gold standard company, if you work for 10-15 years. It will be very useful. If you can go abroad and work, the salary levels are much higher. So always try for these small points. How exactly to do it, maybe a topic for another conversation. But these are some points that I'll keep in my mind if I'm in that early stage of wealth building journey. I would not worry too much about starting a business and all that, because this is not something that everyone can do right off the start. But as you get more skilled at your job, the probability of you starting a business goes higher, and that will add subsequent wealth to it. Now, in order to start a business, the challenge that we run into is that we don't have enough cushion, or we don't have enough risk appetite. You might have met a lot of uncles and aunties, right, that would say that, मेरे पास ideas बहुत अच्छे थे, right? And when I was like 20, 25, 30, I was young, I was energetic, I had great ideas. And if I would have done this, then, Zomato would have been mine, right? Or whatever, Uber would have been mine. So I was the first one to think about these ideas. Then you'll ask, uncle, why didn't you start it? Then he'll say that, okay, because, I had family responsibilities, and, there was like no way I had the money and I could not do X, Y, Z. So then they will start recounting the problems. At a point, you will feel bad for them. But if you delve deeper, it's mismanagement. Okay. Now, I'm not trying to blame, because many people have different family circumstances. So I'm not speaking about that. I'm just speaking in a general sense that, generally speaking, right, people do not plan for a career shift. If you are trying to move from a corporate world to an entrepreneurial world, that requires preparation. That requires baseline preparation. That requires risk management. So what do you need to do? Well, in your 10-15 years of career, let's say that you start working in 21 and you want to try out entrepreneurship when you're 31, you are clear that, say, I have a gold standard job, I'm getting like good salary. You need to start picking skills of investing, which is step 2. Now, what is the meaning of investing skills? For example, many people just would outsource it completely. They will just go and pick mutual funds. Okay, khatam. Or they will just do index investing because Morgan Housel told them to do index investing. That is the best. Why? Morgan Housel said it in terms of US index investing, not India index investing. India mein INR depreciation is also there. So they will miss these entire points conveniently. Just to tell you, like in the last 20 years CAGR, if you take a look of QQQM, which is Nasdaq Composite, which is a US index, the CAGR would be somewhere around 16%. Now that is in US dollar terms. But if you take a look at Nifty 50, then what is the CAGR? The CAGR is 12.5% in the last 20 years. Now that is not the reference, because you will think that it's only 4%. No, not 4%. In fact, now you have to adjust for INR fall compared to US dollar. Now every year INR depreciates by 3 to 4% compared to US dollar. So the CAGR becomes 8% for Nifty 50 over the last 20 years. But if you did index investing in QQQM over the last 20 years, the returns would have been 16%, right? Now that's a humongous difference. But did even 1% tell you about this? The short answer is no. Why? And this is exactly how you destroy your wealth, right? You will not understand these broad trends. You'll just keep on believing in stories. You will never take any contrarian place. You will not go to slightly more uncomfortable investments, and yeah, then you will destroy your wealth, right? So okay, coming back to the topic, that okay, what is second key point in order to build wealth? Well, very simple. It is to invest your money wisely along with your job. Now here also there are sub steps. For example, number one goal that you should have is that, see, you don't have a lot of time, cool, don't do much, just simply go and invest your money in index funds, but pick good indices, not just simply Nifty 50, okay, or not just some random mutual funds. Do you know that almost 85% of actively managed mutual funds do not beat even the benchmark index? So you're much better off investing in index. This is what meta study is. You can study all these points in like 10 minutes on Perplexity or whichever LLM you use. Go and find out, use your own brain. I highly encourage you to use it, okay? If you're a slightly more advanced user, then I would definitely encourage you to invest a little bit more time learning about investing. I'm doing a 2-weekend workshop on investing. In case you guys are keen, you can check out the details in the description and comment box. It's going to be a fabulous crash course. It will give you a lot of insights. And even if you are able to pick one very good actionable point from the entire course, then I'm sure that it would be transformative, right? So far, whatever courses I have run, they have all gotten excellent feedback. So you can go check it out, okay? So this is point 2, that you need to invest your money wisely or invest your salary wisely. Then come step number 3, that once you have gotten a gold standard job, you have worked 10-15 years, you have been investing your salary regularly, then you need to start thinking about wealth explosion or some asymmetric risks. Now what do I mean by that? Let's work through an example. So let's say that you have, by the time you're 35-40, let's say you have 1 crore of wealth or 50 lakhs of wealth. That's good enough money, right? Now with 50 lakh of wealth, you're not going to expense it out. You will not be spending it in like 1 month or 1 year, okay? So probably now you can take out 20 lakhs from that 50 lakhs and think about that, okay boss, next 3 years, 4 years, I want to double this 20 lakh to 40 lakh because that will be a good addition. What are you looking for? Well, you are looking for wealth explosion at that point in time. So then you need to start making a call as to how to build a portfolio. Now this again is very, very important. So let me take you through a very simple example. So let's say that your goal is to grow your 20 lakh of capital into 40 lakh in the next 4 to 5 years, right? So next 5 years, you need to double it. Now here, the first question that you need to ask is that at what rate this 20 lakh portfolio need to grow in order to become 40 lakh. So you need to determine that growth rate. So the way you will do it is that if you take 72 by X, it will tell you the number of years it takes to double your money, and this is the return rate, right? So for example, if X is 6, then it will take you 72 divided by 6, that is 12. So if you grow your wealth at 6%, then it will take you 12 years to double your money. But if you take 72 and divide it by 12, now this will take you 6 years to grow your wealth. So if your goal is to grow this 20 lakh into 40 lakhs over a course of 5 years, what is the rate that you require? Then you require somewhere around, let's say 15%, because you'll have to pay taxes also, LTCG and all that stuff. So 15% becomes your baseline growth rate. Now, all you need to do is to eliminate instruments that will not help you get there. For example, if you are putting your money in PF, EPF, what is the growth rate? Okay, it's 8 to 9%. Okay, fine, you are getting tax advantage. So let's assume 10%. Now, what else, right? I mean, this is still not growing at 15. So you can't double your money investing here. What about real estate? Well, in real estate, you make returns in 2 ways. One is that you have bought the house. Now the value of the house goes up itself. That you bought something at 1 crore, it becomes like 1.5 crores. But majority of the salary class people, what do? They end up buying flats. Now, do flats go up that high? No. So what do they keep doing? They keep on holding the flat, right? And the second way they make return is that they will get something called as rental yield. That 1 crore ka ghar hai, every year they are making 3 lakh rupees as rent. And on that 3 lakh also they are paying like taxes, okay? So this becomes a 3% rent. Now, through real estate, can you realistically grow your wealth as a middle class person? The short answer is no. What is your option? Bonds, right? Bonds, even if you go and check like government bonds, state government also will give you like 9%, and on top of that they will charge you like 33% tax or whatever. Now this is bad. Now here again you're not making any money. So your realistic option is equities. So if you have picked the right asset class, now I'm not saying that put all your money in equities, but you have to understand that almost 80% of the money needs to go into equities. So doing this broad layering is what portfolio building is. This is very important for you to understand, because a small mistake, if it gets compounded for 20 years in your career, you start some, stupid investment when you're 20 years old, you continue it till like 40 years, you will destroy your wealth, right? That's what is happening, right? And people don't understand it. I've been saying it for a while now that, what, all these are like nonsense, right? I mean, there's no point going here. There's no point going here. Very high taxes in India. So if you genuinely want to build your clean wealth, you have to understand a little bit of equities, spend some time there. So this is step 3. Then you need to move to the next step, which is thinking about owning equity, right? Now, what is the meaning of thinking about owning equity? So I'll give you 2 examples, right? Or rather 3 examples. The first example is of Sundar Pichai. Now, if I ask you that, hey, do you think that Sundar Pichai is rich? You'll say yes. Now, then I'll ask you that, okay, how do you think he got rich? You'll say that, okay, because he's the CEO of Google and therefore he's rich. But is he rich by getting a salary? The short answer is no. He's rich because he gets stock options. Now, what is the meaning of stock options? Basically, a lot of Sundar Pichai's compensation that he gets depends on the stock performance of Google. Now, this process is in job because Sundar Pichai would have started out at Google as an employee, right? And then over time, he progressed as a CEO. Now, the board came to him and told him that, hey, boss, your compensation, let's say 10 units of money will give you a salary, but 90 units of money that you'll get every year, it depends on how Google stock is performing. So his compensation is tied to equity, not necessarily to his salary. This is example 1. This is one way of building equity or a stake in company. Now you would say that, okay, I can't become Sundar Pichai. I'll not become the CEO of my company. So what's the option for me? So which brings us to step 2, that, okay, let's say that you're working at Google, Microsoft, middle manager, etc. You have built enough wealth, your portfolio is good, all that good things have happened. Now you're thinking about that, boss, I'm 40 years old. I have already worked at Google. Now at this stage, I want to spend next 5 years thinking about how I can build like generational wealth. Now, what do you need to do? Well, you need to go and own equity in some company. So many a times, many of my friends, for example, what they do is that they are working at top tier tech companies. They will join a startup in India, which is looking to exit or IPO, right? And they will get a lot of stock compensation on that company. For example, many people recently earned very good money on Swiggy, right? Because they were employees at Swiggy. Swiggy recently IPO'd. Similarly, someone who worked at Zomato made a lot of crore-patis, right? Nvidia, almost like I think their 10% of workforce is millionaire, if I'm not mistaken. So all this is like step 2 or a second method of owning stocks. Then you say, I can do even this. Okay, then what can you do? Well, you can go and buy equity of a company. For example, I do not work at Google. I did not get stock compensation from any company. What did I do? Well, I ended up owning a lot of equity. And here's my portfolio in the US. This is something that I built in January. I'm building another portfolio, which is $500,000. And from next month, I'm going to build a portfolio 3. So I'm already deploying a crazy amount of money on these portfolios. Why? Because it gives me access to equity. Owning equity is the way to become rich. Almost every rich person, be it Ambani's, Adani's, be it Zuckerberg, be it Warren Buffett, they all own equities. This is the critical part. But what is it that middle class does? Well, they own FDs. Now, is FD an equity? No. Is EPF an equity necessarily? No, a large part of it goes to debt. Okay, so don't own that. So majority of your money, especially when you are moderately rich, it needs to go to equities. Okay, so then comes the next point, that let's say that you have made decent enough wealth, right? You did all these 4 or 5 steps that I spoke about diligently. You owned equity, you IPO'd or your company IPO'd, you made decent amount of wealth. What is it that you need to do next? Well, number 1, you need to understand how money works, okay? Because if you're not doing any kind of subsequent planning, for example, for your kids, for your next generation, for your older age, then taxes are going to eat most of your wealth away. Okay. Now, this is something that I have recently witnessed, right? Because I'm sitting on very good capital, right? Very good portfolio, everything. And what I started to realize was that, see, boss, if I'm deploying, let's say 100 crores of my own capital in stock markets in a year. Now, in a year, let's say my returns are 20%, which I can make. Okay. Now, on 20 CR, if I have to pay 12.5% capital gains, that's approximately 2.5 CR in taxes, which I'm losing. Now, this is huge amount of outflow, right? Now, what is it that a smart person would do? Well, they will plan for their capital gains tax structure. Now, many countries, for example, UAE or Singapore, here capital gains are 0. your dividend taxes are zero. So what do rich people do? For example, Adani's, Ambani's, right? I mean, Ambani has an office in Singapore, which is called as family office. Now they do exactly this, that they do capital gains optimization, right? Through this, they make other investments in other parts of the economies. Now I will not get into the details of all this, but I'll give you 1-2 relevant points and then I'll redirect you to this video. Now, how do you need to think about this? See, if you are someone who is rich, who already has, let's say, more than 5 crore of capital, then you need to start thinking about capital gains taxation. You need to start thinking about dividend structures, right? That because a lot of your money will be coming in the form of dividends. So you need to understand tax residencies. Now, a very quick example there is that if you are a Dubai tax resident or a UAE tax resident investing in US stocks, then you pay 0% short-term and 0% long-term capital gains if you are investing in the US market. Right now, this is clear. There are rules around Indian market, but it keeps changing, so I'm not commenting there. But even in India, there is advantage for these NRIs, so to say. So this is a way to plan your tax residency. This is a way to plan your systems processes. Again, there is a note that I will attach at the bottom of the video. You guys can go check it out in case you need help with tax residency planning, etc., right? I mean, and if you are already at that level of wealth, this becomes a very important point. Now, natural question comes that at what stage should I start thinking about all this? Well, sooner the better. At least you should have the understanding. But definitely when you're above that 3 crore liquid wealth, you should start thinking about these things because there is a setup cost with all this, right? But once your setup is done, it's recurring benefits that accrue to you. So this is very important. Every rich person is doing it. You can bash me, right? You can say whatever negative things you want to say about me. It doesn't matter. I'm just genuinely telling you, right? I mean, what lawyers and CAs will tell you after taking lakhs from you, right? So I'm giving all this information for free so that it benefits people, right? So this is tax optimization point. The sixth point that you need to understand as a rich person or as you are on your journey of becoming rich is the concept of risk-adjusted reward. It's really funny for me to see, right, people in the Indian market right now, right, who are very excited, we'll go and buy a micro cap or we'll go and buy like a small cap, mid cap company and it will give us like 25% CAGR. Okay, let's run the math, right? So for example, if you look at mid cap 150 or small cap 250 index, the CAGR would be somewhere around, let's say 22%. Okay, 22%. Now, if you adjust it for INR fall on yearly basis, and this 22% is the last 20-year data. So I'm taking a look at the metadata. So 22%. Now you minus 4% because we have to adjust it for US dollar to make the returns compatible. This gives you 18%. Now, on top of that, there are high taxes, transaction costs, if you're investing via mutual fund, etc., but leave it. Okay, let's assume 18%. Now, your goal is to make 18%. The risk on micro cap, small cap, mid cap is so high, right, in India. Many companies go bankrupt. Many companies get screwed by regulations, whatever it is. If your goal is to make 18%, what do you need to do? Well, 16 though you are making it QQQM, right, which is Nasdaq composite. The risk adjusted return on Nasdaq is much, much better compared to like small cap 250 and mid cap 150. Okay, this is a fact, right? You can test it, you can play around with data, see it for yourself, you yourself will understand it. But what are people excited about? Mid cap, small cap khareeding, right? It makes no sense whatsoever, right? I'm not saying that you should not buy it, you should definitely buy it, but when it is definitely at a discount. Is the market or mid cap 150, small cap 250 at a discount? No, not at all. Okay, the valuations are still high. So understanding these small points is how you deploy your capital every month, and rich people have a very clear understanding where risk adjusted returns are sensible and they take sensible bets. This is the most important point. Many people destroy their wealth because they have no understanding of what risk adjusted rewards are. Okay, so then comes the final point of your rich journey. Then I would call this is the ultimate wealth flex, that when you start throwing your money in order to buy time, right? Now, why is that important? Because, for example, I grew up with a very frugal mindset that, kyun paisa kharch karna hai, right? I mean, for example, if I have to take an auto, pay like 100 rupees, why do that? Let's just walk for 1.5, 2 kilometers, whatever it is, right? So yeah, I used to come with that kind of a mindset, but now my mindset has changed quite a bit, right? It's about, okay, wherever I can throw some money, get to buy more time, that's very useful for me. Why? Because now I'm making a lot more strategic decisions. Now in a day, if by having like a driver, or if by having a house help, or if by not worrying too much about money, if I can just simply throw money to buy time, or having like additional employees, what I can do is that I can create more time for me, right? Now you'll say, okay, you are wasting time watching Netflix. Yes, but that's relaxation, because now I have to make a lot of strategic decisions, okay? Because the cost of making a bad financial decision in my career now, it's very, very high. So, and when do you make these type of stressed out financial decisions? When your mind is not working properly. So keeping your mind clean is very important. Focusing on your mental health is very important. But you will only be able to do it when you can create a lot of time. So as you grow in your wealth building journey, gaining access to time is very critical. Now, why am I saying it? Because I meet a lot of my friends, right? They are working at top leadership levels, stressed out, like working like still working 16 hours a day despite being multimillionaires. Now that does not make too much sense for me. If you're already falling in that bucket, you need to understand this last point about time management. Very, very critical. Most people don't think about this, but honestly, unless you control your time, you can't really call yourself rich. That's it, guys. I hope you enjoyed this video. I hope this was useful. If it did help you, do consider subscribing to the channel, and I'll see you soon.